Hey everybody, it's your Uncle Chuck here. Wednesday, October 26, 2022. Interesting day, lots to talk about. I want to welcome everybody to the show. Welcome our new subscribers. Thank you, our buddy Greg Manarino, who constantly promoting the show. Greg, we love you. Welcome aboard to all of our new subscribers. Information today on the markets. Most of you guys know this stuff. We'll go through it briefly. Stock market mix today with the Dow eking out a very small gain. The S&P down and NASDAQ kind of getting hammered pretty good. We have some tech stocks, Google, Microsoft, and others coming in with some pretty crummy earnings. Facebook, or Meta, and leading the NASDAQ to have some pretty serious declines today. Bond market, not making much sense to Uncle Chuck here. Rallying. Now, we all know the bond market's in a pretty serious bear market, but it starts to rally every once in a while, and what it does, it rallies pretty significantly. So we had the 10-year today sitting at 401, barely staying above that 4%. It was just recently 420, 4.2, so it's really cratered, down 9 basis points today from 4.10 to 4.01. The 2-year down 4 basis points today to 4.42%. So the spread, these yields are inverted where you have the shorter term higher than the longer term, which is not the way it's supposed to be. And the spread was narrowing. It was looking like it was kind of going to start flattening out. Now the spread widening back out again. More signals of recession coming. The dollar down big today again. The dollar getting whipsawed around. I think other countries reacting to the dollar, selling dollars to support their own currencies. Dollar down on the index over 1 point, sitting at 109.69 on the index. Pretty substantial drop. It was just a short time ago at 114, now down to 109. Dollar coming back down to earth where it belongs. With the dollar down, metals have a little bit of a rally today. Gold up $12, sitting at $1,666 per ounce. Silver rallying 17 cents per ounce at $19.59. If the dollar continues to tank, I think this rally in metals could really pick up some steam. Oil up today over 3%. $88.15 for a barrel of your West Texas Intermediate. Natural gas has a rally, but still anywhere near its highs. $5.67 for their million BTUs, up 1% today. These markets haven't been making much sense to me. Natural gas winter's here now. It's getting cold even in Vegas in the nighttime. Heaters are on. You would think natural gas prices would be heading up. I just got a notice from my gas company that my prices are going up, and we see natural gas on the markets way down from, it was well over $9, now at 5 and change, 567. Pretty big drop. Bitcoin today up pretty nicely, sitting at $20,764. Nice to see Bitcoin back above 20K. Hopefully now it seems like it's been in this trading range, and every time it has any kind of rally, it backs right back up. So be cautious, Bitcoin holders. And if you're holding Bitcoin and you want to sell, keep an eye on it. Here comes your rally when your opportunity. News you guys need to hear. We all know that next week, the Federal Reserve will be doing their thing again, right? And we're going to hear Wednesday about it probably, likely, and I would say chances extremely well of a 3/4 point rate increase, which will bring the Fed funds rate back well up, well, not well up, 4.10 the way I calculate it. They'll say between a range of 4 and 4.25. The markets are not going to like it. It's going to lead to a whole bunch of different problems. The Fed is singularly focused, at this point at least, on inflation, recession, foreigners, allies and enemies alike, be damned. Goldman today coming out, listen to this, guys. Goldman says that the market has not yet priced in any recession. So basically the market's been reacting to interest rate increases and what that's going to mean, with borrowing costs, but not so much that the markets are going to crack. Well, they're going to. I already really have with 20%. with a 20% decline. But they're really not pricing in a recession yet. They say that if a recession comes and it's kind of a big recession, which the way things are going could very well happen, they expect that the stock market's probably going to get slammed pretty good. They said that the bond market has been much better at pricing in the future, at this point at least, what they see the future as, than the stock market has. This was an interesting thing I wanted to share with you guys. I've been complaining every day about the news is nothing but negative. Everything's bad. Everything's, the news we're getting, not great news. But this was interesting. It'll kind of make you smile. They actually polled the public. And the public responded, 49% of Americans believe that the Federal Reserve makes their decisions in the best interest of average Americans. Really? Half the people believe the Fed is working in their best interest, not the best interest of the corporate world or our Brazilianaire overlords who really run everything? I got to know who these 49% are, guys. In comments today, please answer that survey yourself. Do you believe that the Federal Reserve makes their decisions the best interest of average Americans? My vote is no. This is the real interesting news I wanted to share with you guys today. With this dollar going like it is, and with interest rates rising and going to continue to rise, what we're looking at coming up here soon is a big Asian crisis in treasuries. Asia holds a lot of U.S. treasuries, $3.5 trillion worth of U.S. treasuries, with China and Japan each holding $1 trillion. Then you got the other $1.5 trillion spread out between Hong Kong, India, the Philippines, South Korea, Taiwan, and other places in Asia. This is basically an instant replay of the 1998 Asian crisis, when Greenspan was raising rates aggressively, and it caused a massive crisis in Asia because a lot of Asian currencies at that time were pegged to the dollar, right? It created all kind of instability in Asia, and we're going to basically now see an instant replay of that. It was so bad then that most of the Asian countries broke their peg to the dollar. So they're no longer tethered to the dollar. And there we go. Now what's happening here, these Asian countries are going to suffer big losses 4 different ways. The first one, the most obvious one, is every time the Fed raises rates, the bonds that the Asians are holding go down in value. Now, most of you are aware, but let me make it clear to everybody, okay? The way it works in the bond market, okay, it's pretty simple. As prices go up, picture a teeter-totter in your mind, okay? As the prices go up, the yields go down. As prices go down, the yields go up, okay? So with this bear market and the Fed raising rates, yields have been going up. So now the Asians are holding these bonds at much lower rates, and those bonds lose value because people don't want to hold a bond at 2.5 when they can buy a bond at 4%, right? So now if they want to sell those bonds, they're going to take a huge capital loss. And the Asians are kind of stuck with those bonds right now because if they try to offload bonds, it's going to create a gigantic panic, and everybody's going to head for the exits all at the same time, which is going to just cause prices to crash even more and rates to spike. So they're going to lose a ton of money on the trillions of dollars in bonds they're holding, right? Then you have most Asian countries are exporting countries, right? Korea, Japan, Singapore, China especially, right? India. Well, guess what? A strong dollar does not help their economies because it makes their exports more expensive coming into the U.S., which typically brings sales down, right, and hurts the economy. So that's the second way they're going to lose. The third way they lose is that destroys the confidence of people in their governments, in holding bonds and holding their currencies, which are losing value. So there's your third way. And then the fourth way is you're going to have some hard feelings as these economies and these countries turn away from the dollar, right? Which is right now the world reserve currency. So this was an interesting thing. In 1998, China was still at that time holding, actually I think they held more treasuries then than they hold now. And they were taking gigantic losses as the Fed was raising rates. Their premier was Wen Jiabao or whatever. I don't pronounce Chinese names too well, so forgive me for that. But here's what his quote was. He said, Beijing was concerned about the safety of its assets. And he called on the United States to honor its word, stay a credible nation, ensure the safety of Chinese assets. Well, I'm guessing that Japan is probably feeling the same way right now. And these countries, how many countries can afford losses in the trillions of dollars? Not many, right? So I think that this could lead to something very, 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 very bad. We're going to have to kind of figure out how to work with, our friends and our enemies on this economy. We're all tied together now, whether we like it or not. And this is going to be a big deal. You're going to be reading about this in the papers very, very soon. Anyway, guys, that's all we have for today. We really appreciate your support. We appreciate all of your likes, your comments and questions. I'm going to be on as soon as I finish this tape today, answering your guys' questions. Get in the comments. Share the videos with your friends. We appreciate the support. Tomorrow, another Big Data Day. Let's see what it brings us. We'll be back then to give you guys the news you need. In the meantime, until we talk then, take care. Thanks.